Welcome to News Nexus, your trusted source for deep dives into global trends, economics, and digital breakthroughs. Today, we're exploring one of the most revolutionary financial phenomena of our time, the digital currency explosion, what you need to know. From Bitcoin to central bank digital currencies, stablecoins to blockchain-backed innovations, the digital currency revolution is reshaping how we think about money, trade, and even governance. Grab a coffee, sit back, and let's unpack everything you need to know in this 20-minute deep dive. So, what exactly is digital currency? Digital currency refers to any form of currency that exists only in digital or electronic form. Unlike physical cash or coins, it exists purely in cyberspace. There are three main types of digital currencies. First, cryptocurrencies, decentralized and typically built on blockchain technology, such as Bitcoin and Ethereum. Second, central bank digital currencies, CBDCs, digital versions of traditional fiat currencies issued and regulated by governments, like the Digital Yuan or the Digital Euro. Third, stablecoins, digital currencies pegged to stable assets like the US dollar, designed to minimize volatility. Think of it this way. If physical cash is the horse and carriage, digital currencies are the electric car of finance. Let's begin with the disruptors, cryptocurrencies. Bitcoin emerged in 2009 in response to the global financial crisis. It introduced the world to blockchain technology, a decentralized, transparent ledger system. Since then, the crypto world has exploded. Ethereum introduced smart contracts, allowing for decentralized apps and services. Newer blockchains like Solana and Cardano have brought speed and efficiency. Thousands of alternative coins, or altcoins, have entered the market. But it's not just about price speculation. Cryptocurrencies have laid the foundation for entire ecosystems: decentralized finance, DeFi, decentralized autonomous organizations, DAOs, and even non-fungible tokens, NFTs. However, with innovation came risk. High volatility, scams, rug pulls, and a lack of regulation created an unpredictable and sometimes dangerous environment. This paved the way for something more stable, stablecoins. These are digital assets backed by stable financial reserves, such as fiat currencies or commodities. Examples include Tether, USDT, USD Coin, USDC, and DAI. Stablecoins aim to offer the best of both worlds, the efficiency of crypto and the stability of traditional money. They play a crucial role in the crypto economy, enabling seamless trading, payments, and lending within decentralized platforms. In countries battling hyperinflation, stablecoins have even become a financial lifeline. Now, let's talk about the big players, governments. Across the world, nations are actively exploring or launching central bank digital currencies. Over 130 countries, representing more than 98% of global GDP, are working on some form of CBDC. China is leading with its Digital Yuan, already being tested in several regions. India has introduced its e-Rupee. The European Union is developing the Digital Euro. The United States is researching the potential of a digital dollar. CBDCs promise faster transactions, greater transparency, and broader financial inclusion. They also offer governments more control over monetary policy in the digital era. But they raise serious concerns, including surveillance, data privacy, and the potential disruption of traditional banking systems. Whether it's a cryptocurrency or a CBDC, they all rely on blockchain, the backbone of digital currency. A blockchain is a distributed digital ledger maintained across a network of computers. Each transaction is recorded in a block and linked to the previous one, forming a secure and immutable chain. Blockchain's benefits are clear: transparency, security, and decentralization. But there are also challenges. Older systems like Bitcoin's proof-of-work model consume massive amounts of energy. Scalability remains a concern, and global regulatory frameworks are still catching up. Let's take a look at real-world use cases. In finance, digital currencies enable instant cross-border payments and provide banking access to the unbanked. In retail, crypto payments are being integrated by platforms like PayPal, Visa, and Shopify. In gaming, digital tokens fuel in-game economies and play-to-earn models. In supply chains, blockchain offers transparent tracking from production to delivery. Even governments are experimenting with blockchain for voting systems, land registries, and welfare distribution. But no conversation about digital currencies is complete without addressing risks and regulation. Cryptocurrencies are known for extreme price volatility. Digital wallets and exchanges are frequent targets of cyber attacks. Legal uncertainty still clouds many aspects of crypto use, and the environmental impact of energy-intensive mining remains a major concern. Governments around the world are stepping in. In the United States, the SEC and CFTC continue to debate how to classify cryptocurrencies. Europe has introduced MiCA, the Markets in Crypto Assets regulation, to provide a unified legal framework. India has implemented taxation policies on crypto gains and is moving toward clearer regulations. The global race to regulate digital currencies is now in full swing. So, what does the future look like? Experts predict widespread adoption of CBDCs within the next 5 to 10 years. We'll see the growth of Web3, a decentralized version of the internet powered by blockchain. Programmable money will enable smart transactions that trigger automatically when conditions are met, and artificial intelligence will likely integrate with blockchain to optimize digital economic systems. Digital currency is no longer just a buzzword. It's becoming the foundation of a new financial system, faster, smarter, and more inclusive. But unlocking its full potential will require thoughtful regulation, continued innovation, and widespread education. Thanks for watching this deep dive on the digital currency explosion here on News Nexus. If you found this informative, don't forget to like, subscribe, and share your thoughts in the comments below. Do you believe digital currencies are the future of money or just a passing trend? Until next time, stay informed, stay ahead.